Hello. Welcome to my channel, my dear friends. My name is Avilash, and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the Forex chart of Euro USD. In fact, I was just thinking whether I should make a video on Euro USD or not, because to be honest, I do not like to make videos on charts and levels that I'm not much confident. And Euro USD is a pair, okay, that does not go well with me. On a personal note, at first, let's have a look at the chart of DXY. So DXY, yes, DXY, okay, shocked us, surprised us by taking support around 100.80. The selling pressure was so high. We discussed about the possibility of DXY breaking the support and going down, but the buyers around this area did not surrender. They gave their best fight, and ultimately we could see a good bounce. DXY ultimately closed at 101.58. This is the last traded price of DXY. So the Monday will be very open, important. The market opening will be obviously important, because after the market opening, the DXY will try to recover. And as both fundamentally and technically DXY is weak, so as a result, the recovery will not be smooth. There will be multiple resistances on DXY. The next resistance will be around 102, then 103. There will be multiple resistances. And in case DXY fails, and if a news comes out during the weekend, because weekends are scary because of news. So in case a news comes out and DXY starts falling, next time it may be very difficult for buyers to protect this level. Okay, and if DXY breaks this level here, then there is a possibility of further downside. So market opening will be very important. Let's see how DXY reacts. Okay, but though DXY is showing recovery, though DXY is trying to recover, but as traders, we can clearly see that the market sentiment is not very positive. Now let's have a look at the chart of Euro USD. As I was saying, that I was skeptical whether to make a video or not, because we could see that after going for almost a breakout, okay, it came out to be as a false breakout, and we saw a big drop. Not only on the chart of Euro USD, we saw a big drop on the chart of GBP USD, Gold USD, and others. So my dear friends, personally, I feel that we should only trade on the levels that we understand properly. We as retail traders have some limitations. We cannot interpret the market on each and every level. It is not possible for us to understand the market at each and every level, because as traders we can only use the technicals. Apart from technicals, we cannot change the fundamentals of the market. Okay, so as a result, I think that our capital protection should be our first priority always. So as a result, I will simply recommend few levels that you can look for on Monday or Tuesday. If you see market coming down to those levels and reacting according to expectations, you can go for it. Okay, so first of all, if you are holding any buy position, sell position, be on the trade, no need to exit. Yes, whether you are holding a buy, sell, okay, it totally depends on you, because right now the market sentiment is okay, kind of very much confusing. If you look at the news, then you'll see that almost every day we are getting news about interest rate hikes. Personally, I'm kind of frustrated with all the news, so that's why I have stopped swing trades. I have stopped overnight positions. I'm simply trading on level to level only, 30 40 pips. That's it, because I'm totally done. I'm frustrated with the interest rate hikes, this news and all. So on Monday, right after the market opening, if you see market coming down, then observe the market around the first support of 1.0937. This is the first support where you can expect the market to take support, because we have a support in the form of Fibonacci. The one thing that I would like to mention here is that if you observe the present structure of the market here, then you can see that the trend line is acting as the dynamic support here, and this is the market structure. the most important thing is the market structure. So whenever market follows a particular structure or pattern, market always try to complete the structure. And you can see the level that I mentioned right now is in between. So as a result, if you see that right after market opening, market is coming down, Euro US is coming down, but there is not much volatility, then you can expect the market to take support around this area. If market does that, you can go for a buy. But if you see that market is coming down with big red candles, means the selling pressure is high. In that case, you cannot expect the market to take support around this area. It means that market is coming down to complete the structure, complete a pattern. So if the volatility of the market is low, and if you see market coming down, you can expect the market to take support around 1.0937. You can see that I am trading on the 4 hours time frame. You simply go to hourly time frame or 50 minutes time frame and just observe the market. If you see the market is taking support, market is showing price rejection from below, you will get a confirmation that okay, the level is working, buyers are present, and you can go for a buy position. But in case the selling pressure is high, volatility is high, I will not recommend any sell position in between the chart. And what you can do is you can wait for the market to come down to the next support around 1.0876 to 1.0856. 1.0876 to 1.0856. This is the next support zone on the chart of Euro USD if market breaks this level. So volatility of the market will play a big role. If you're new to the market, if you're a beginner, then slowly with time you'll understand that volatility of the market is extremely important. Volatility plays a big role. Okay. So if market comes down to this level, if market breaks this level here, then expect the market to take support around this area 1.0876, 1.0856 or 1.0850. This is a whole support zone here, and we can also expect the market to take support around this area. And if we take the help of Fibonacci, you can see that we also have Fibonacci 38.2% retracement around this area. And if you have heard me saying that Fibonacci 50 is a stronger level, then yes, Fibonacci 50, Fibonacci 61.8 is a stronger level, but those levels are far away from the market right now, so we don't need to discuss about them. The Fibonacci 50 is around 1.0800, and to be honest, this level is really good, because apart from Fibonacci 50, we also have support around this area plus 200 moving average. So if we combine all the factors here, then yes, this level is quite good, but right now the market is far away. So as a result, wait for the market to come down these two levels. If market reacts according to expectation, we can definitely go for a buy position. I'm not commenting anything regarding any resistance or selling pressure, because right now market is here. Let's wait for the market opening, then we can decide how to trade. This is my analysis. I can be wrong as well. My dear friends, no trader is 100% accurate. So my SLs get also hit. So please follow proper risk management. As always say, never ever gamble with your hard-earned money. Bye-bye. Take care.